This is Matthew Kratter's Bitcoin University. Today I want to talk about Bitcoin, Trump, and the exit tax. And just to be clear, none of what I say here is investment advice or tax advice. So this is a follow-up to yesterday's video about the first American Bitcoin president. I was talking about my wish list for President Trump, which included not only abolishing the capital gains tax on Bitcoin, but also getting rid of the U.S. exit tax. And Pug of Wall Street had a good question here. He writes, I Googled what an exit tax is, and it didn't sound that unfair. Quote, the tax is designed to make sure that all unpaid taxes are settled before a U.S. citizen or resident withdraws from the U.S. tax system. Could you elaborate? First, some background. Why would you ever want to leave the U.S.? For many of us, this is almost unthinkable, but I think there are still good reasons, especially if we're looking ahead. And the world is a really big and beautiful place. It's nice to see lots of it. Bad things could happen in the U.S. eventually. Constitutional rights could cease to be upheld, and the U.S. could devolve into a surveillance police state. It's unlikely given the number of tools of self-defense that we have here, which actually outnumbers the number of people that we have here, but still a possibility, especially in the more distant future. Or maybe you want to leave the U.S. permanently. Maybe it's just because your spouse got a great job in a different country. Maybe she's from a different country. Maybe you don't want to be stuck under the U.S. tax regime when you've decided to move to a different part of the world. Or maybe you're just a sovereign individual, ideologically speaking, who doesn't want to be tied down to one country. You love the U.S., but you don't want to be tied down here. You want to live all over the world. Now, for most countries, if you stop living in that country physically, you won't owe taxes in that country, even if you remain a citizen. But the U.S. is quite different here, having citizen-based taxation. U.S. citizens and residents are taxed on worldwide income. So even if you physically leave the U.S. and never come back, you're still going to owe U.S. taxes on everything for the rest of your life, on all your global worldwide income, unless you explicitly renounce citizenship, U.S. citizenship, and pay the exit tax. So the next question, to whom does the exit tax, the U.S. exit tax, apply? It applies to anyone who wants to renounce their U.S. citizenship or residency and who also has meets one of the following criteria. Number one, net worth of $2 million or more, and we're going to come back to that in a moment. Number two, average annual net income tax for the past 5 years is more than a certain amount. This is adjusted for inflation every year. For 2023, it was $190,000 in terms of a 5-year average. Number three, you may have not complied with tax obligations for the past 5 years. So if you're any of these three things, you're going to get ensnared in the U.S. exit tax calculation. You're going to owe an exit tax that will include unrealized capital gains taxes on stocks, bonds, real estate, Bitcoin, etc. So this is the thing. The U.S. already does have an unrealized capital gains tax. It's very, very evil, where you pay a tax on your profits before you even exit the position. A realized capital gains tax is, for example, you sell your Apple stock, you've held it for a year or more, and so in that case you'd pay a long-term capital gains tax on it. But you don't pay a tax on Apple stock while you're holding it. You only pay a tax when you exit your position and you have a capital gain or profit, whereas the U.S. exit tax applies to unrealized capital gains taxes where you still own the asset. Now, is this just a problem for rich people? No, it's not, for the following reasons. First of all, number three here, you haven't complied with tax obligations for the past 5 years. That really can ensnare anyone, so it's very important to stay up to date on that. Number two, average annual net income tax for the past 5 years is more than a certain amount. This is eventually, number two here, is eventually going to ensnare most people, because although the amount is adjusted for CPI inflation, the true rate of inflation is always much higher than the fake government calculation, which is the CPI. So you basically have another case here of tax bracket creep due to inflation. Bracket creep is just when inflation pushes taxpayers into higher income tax brackets or reduces the value of tax credits, deductions, exemptions. Bracket creep results in an increase in income taxes and really all taxes without an increase in real income. So this is the real problem with an exit tax, and this is the problem with all taxes where the brackets aren't adjusted upwards quickly enough with inflation. Put a link to this in the description notes below from the IRS website talking about the exit tax. Finally, there's the Bitcoin angle. There's this capital gains, unrealized capital gains tax angle. If you were listening to this channel late 2019 or early 2020 and were getting into Bitcoin as much as I was, and you're a U.S. resident or a resident of a fairly wealthy country like in the EU or Australia, Canada, the US, it's a very good chance that you currently own at least to Bitcoin. That's because that period when I first started sort of talking about Bitcoin, you could get 2 Bitcoin for something like $10, $12, $14, $16,000 because Bitcoin was really trading between about $5,000 and $10,000 a coin. Now fast forward a few years from now when Bitcoin is at $1 million per coin. And remember when I was telling everyone when Bitcoin was at 5 or 6K and I was telling everyone that it was going to 50 or 60K, that seemed quite insane. Now we're well above that. So now I'm telling you, you're going to have to start planning for when 1 Bitcoin is valued at $1 million in terms of current purchasing power in a few years from now, probably by 2030 at the latest. So now that same person who's listening to this channel and accumulated 2 Bitcoin for, call it 14K in 2020, now has a net worth of $2 million at least because they own 2 Bitcoin. Bitcoin's worth $1 million per coin. So now they're going to end up being ensnared by the U.S. exit tax if they ever want to leave. So if we calculate the exit tax, I'm not sure if I'm doing this exactly correctly, but it's roughly 2 million minus 14,000. That's 1.986 million in unrealized capital gains. So this is the difference between your entry price, basically your cost basis, and the current value of the position in Bitcoin. Now you apply a 23.8% long-term cap gains tax. We have the 20% bracket, and then we have the 3.8%, which is still a remnant from the wonderful Mr. Obama. So you apply 23.80% long-term cap gains tax to that 1.986 million, in other words, an exit tax, and you'll end up owing $472,668 to the U.S. government as an exit tax. So if you want to leave the U.S., you're going to first need to probably sell a lot of your Bitcoin holding, unless you've got another $472,000 just lying around. You're going to have to sell some of your Bitcoin to pay this exit tax, to pay this extortion fee. Now, if you add hyperinflation to the mix and your Bitcoin are now worth $10 million a piece or $20 million total, your exit tax is going to be $4.756 million. And that's assuming they haven't increased the capital gains tax or exit tax rates by that point, which they certainly will have if they want to stop a flood of people leaving. So this could become a real problem for American Bitcoiners. And it's yet another reason that American Bitcoiners should remain here and help to fix this country, which really remains one of the last real bastions of freedom in the world, thanks to our weird government system with its 3 branches and its checks and balances and its states' rights and its Bill of Rights, etc. Taxation is theft. Exit taxes are a form of totalitarian control and theft. But because of the current high indebtedness of the world, they're probably coming to your country soon as well. The UK government has been mulling an exit tax. This is as recent as October 11th, 2024. They don't like people leaving the country and its policies. And then France has been talking about it as well. This is an article from October 18th, 2024. A group of cross-party French MPs have voted to strengthen France's so-called exit tax and return it to its original and stricter 2011 status. Now, this will always come up in discussions like this. Why not just have a boating accident and pretend that you've lost access to your Bitcoin so you don't have to pay an exit tax on it? This can be a very, very dangerous game to play, especially with a very evil U.S. government. If you've ever mentioned boating accident online, those words, or if you appear or identify as a Bitcoiner online, the IRS is going to be very skeptical of your argument. Also, if you bought KYC Bitcoin, the IRS may end up following you on chain, beginning with the Bitcoin withdrawal address that you used to withdraw your Bitcoin from the exchange, which has been linked to your personal information, and this is all reported by the exchange to the IRS, so they'll have this information. So if you end up saying that you lost the private keys to your Bitcoin in a boating accident, and then they see that Bitcoin move on chain, you may get a knock on your door from the U.S. government. This is, of course, the argument in favor of owning some non-KYC Bitcoin, some anonymous Bitcoin as well. To be very, very clear here, I am not arguing for tax evasion or for tax fraud here, obviously. You should always pay your taxes unless you want the men with guns to show up at your house and put you in a metal cage. That being said, you might want to look into non-KYC Bitcoin and CoinJoin just for its intellectual value. It's not something I discuss that much here for obvious reasons, but I do discuss it on my paid site where you can go when you're ready to go deeper down the rabbit hole. I'll put a link in the description notes and the pinned comment to this. You can see we did a live class which was recorded in May of 2024 on CoinJoin, and then a live class in June on non-KYC Bitcoin. We've covered Bitcoin loans, etc. And this is in addition to the paid course as well. So check out that material when you're ready and you've exhausted all the free material on this YouTube channel. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.